Wow, I'm going to share with you guys 4 leveraged ETFs that are likely to double as soon as the market turns around. On every rally this year, these ETFs have gone up anywhere from 50 to 200%. You don't want to miss out on opportunities like this, especially with the market as weak as it is. So before we jump over into today's session, remember, if it's the first time you're seeing us on the YouTube, subscribe, hit the bell. Please share the content. I love sharing my 30-plus years experience in the stock market and technical analysis with folks. I want to help you trade your way to wealth and financial freedom. Let's jump in today's session right now.
Good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader. Welcome to Trade Your Way to Wealth and Financial Freedom. It's how to stay on course with your stock picks, plus some trading tips. And we got some really good ones today. It's an interesting market we're in. Clearly, the market did not like the 0.75 increase in the Fed rate, but I think they even liked less the terminal rate they're planning for by the end of the year, which is 4.5%. That'll be, and if we do in fact hit that, so what does that mean? That means that between now and the end of the year, the Fed will raise the rates another 0.75 and then 0.5 to hit that 4.5. That's what they think they need to use to be able to control the interest, or not interest, but the inflation rate, and to keep us from supposedly, quote unquote, going into recession, although we do know that depending on what data you look at, we're probably already in recession. I want to welcome everybody. Thanks for joining. If you're joining us over on the YouTube channel, welcome aboard. If you are over there, just let us know who's there. Just say hi. I want to welcome Steve Farrar. Steve, Neil's not with us today, but welcome aboard. I know that finding a stock is kind of slim pickings right now. Isn't that correct?
Absolutely. In fact, it's one day I haven't seen in several years. Every stock on the IBD 50 is red today.
Wow.
Right now.
And
you don't see that often.
You certainly don't. And you know, one of the things I think we could probably also say is that if it was still the IBD 100, we would probably have 100 stocks that were like that.
Absolutely. I agree.
Hey, just a reminder that all materials we present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. I love this statement. This statement is from Jesse Livermore, and it talks so much to what we need to be doing right now. We need to basically just sit tight, let the market come to us. So, it was, as Jesse said, it was never his thinking that made money, but it was his sitting, waiting for the market to come to him. So here's where we're sitting. A little bit of a drawdown from last week, but the system worked as advertised. It took us out of positions as, for profits and or protected our capital to the downside. Here's where we were on the S&P and the indexes last week. As you can see, going into this week, well, things have not gotten better. They have gotten worse. The NASDAQ is most notable, I think, in that it's down 32% as of about 9 o'clock this morning. S&P has now driven down into bear territory and sits there at 23% down to the downside. The Dow, which has been fighting and struggling to stay out of the bear market territory, is right on the cusp. I mean, oftentimes we'll see this kind of thing when some of the stronger indexes start rolling down and hitting into the bear territory. It causes an inertia or a weight to pull down the rest of the markets. Very rarely will you see it where the Dow, because it's such a small number of stocks, that the Dow would pull up the S&P 500, the NASDAQ 100, or the Russell 2000. It just doesn't work that way. The larger indexes tend to provide the gravity, if you will, to pull down the other indexes. So that's where we're sitting at right as of right now. I'm going to jump in and just do a real quick welcome aboard over there, Jeffrey on the YouTube channel. Looks like there's a couple more folks over there. Welcome aboard also. If you do have any questions, y'all, just type them into the chat box there. And also remember to share your what you're seeing over there. But Steve, let's go ahead. I'm going to jump over and just take a look at the indexes and tell, one of the things that we want to be doing is identify the path of least resistance. And I think what we're seeing right now is the path of least resistance per the charts is to the downside. So how do we want to trade this? Right now, as we see, we hit the high and then basically fell away from that. And then here was the Fed, dropped down again, and then have blown to the downside significantly. This is one of the largest downside, this past 2 weeks have been one of the largest downside moves that we've had in a while, ever since the going back here to the first part of June. But it's incognizant, or it's symmetrical with what has already happened. Let the past be your guide as you look at these individual charts. So we're breaking to the downside. Start as what I'm doing, and I think probably Steve is doing the same thing, is I'm looking for levels of past support, which are basically previous swing lows. Look over to your left. Does it correspond with a additional level of consolidation? The swing lows, because that's where we can anticipate a potential bounce, especially when the market is releasing to the downside like it currently is. The other areas I look at are the Fibonacci's. On this particular case, I did the measurement of the fib from this high to this low. This is a Fibonacci extension back to this high. The purple line is 100% symmetric move. This line right here at the 371 is the 1272 extension. And then the next extension down here, and this is the 1618 extension down at 360. So approaching those areas, I want to have alerts. Great question, Mark. We're going to hit on that in just a little bit. So I want to have alerts right now. What am I waiting for? I'm waiting for, one, to find a solid level of support. I'm waiting for to get a candlestick reversal pattern, which is going to either be a hammer, a bullish engulfing, a bullish harami, or a piercing line, or perhaps multiple dojis spinning top dojis at a support level. And I'll look for them to happen somewhere at these past levels. We want to also be cognizant of the 200-week moving average. If the price actions fail there, then I think that'll be another nail in the coffin to drive this market even further down. A break and a close below this increases the probability we're going to fall further. Will we have a bounce before that happens? Could happen, because we are extremely extended away from the 20-day moving average. And it's this way on every one of the indexes. So on the spiders, I'm not buying it until either I'm at a defined level of past support, or I will look to do a bearish trade on a move back up into where? Back up into these moving averages right there. That's when I'd be looking at doing some kind of a short trade or a inverse leverage ETF to the downside. So that's what I've got going with the S&P. NASDAQ is represented by the Qs. Similar type pattern. We are breaking well below everything. All the moving averages are stacked to the downside. We're approaching a level of past support. Interesting, I always pay attention to these past supports where it is a combination of both a moving average line, past support from the past low, which we see right there, and also a Fibonacci line. So between the 272 level and approximately 269, that would be a zone of potential support where we could get a bounce. what is my expectations for the bounce as of right now? The expectations of the bounce would be a move back up towards the moving averages, similar to what we saw over here. Once we have put in a new, at least temporary swing low, then I can take this move right here. I can take that move and project that up to get an idea of where prices could go if they follow the Fibonacci's. And so that's what I'm looking at with the NASDAQ. The other thing, as with the NASDAQ and the Russell and the S&P so far, check this out. Momentum, 3-line cluster, but this is the second day we've had it. 3-line cluster that is pushing to new lows. We've talked about that before. When we get a 3-line cluster, we're looking for a reversal within a 1 to 4 trading period time frame. So within 1 to 4 days on this daily chart, I would be looking for some kind of reversal signal. The challenge is be patient till it happens. Be patient till it happens. Similar over here, we've got a 2-line cluster on the weeklies. However, I'm anticipating a push down even further down to the 261 level or this level right there, right? Approximately there, the 271 level. So somewhere in that $10 range was where I would expect a reversal signal on the NASDAQ. The NASDAQ right now is the weakest of the indexes. IWM, the Russell. It's just like a snapshot of the same chart almost. Notice what's happening here. We are pushing down well out, the moving averages have all crossed to the downside. They are accelerating. Look at this, basically slope of this, accelerating the losses to the downside. At the same time, momentum can't go much lower. Now, prices can, but momentum is at a new low, and we would anticipate momentum to start shifting back up to the upside. On our weekly chart, we're looking at it's still accelerating to the downside on the TSI. That's one of my momentum indicators, and also on my market forecast. As a added bonus, I'm going to show you one other chart that I'm starting to take a look at because we're at the end of the month, is take a look at what's going on with the monthly chart. And right now, TSI is still crossing down, market forecast still pointing down. And I like to add on the MACD chart on the monthly chart. And as you can see, it has crossed and is still going down. The MACD histogram has not shown that it wants to trigger the upside, but utilize both the monthly and weekly charts to identify strongholds where past buyers came in and or past sellers came in. And we see we've got a strong level there on IWM at the 162 level. That breaks, look for it to reach on down to those other layers. Steve, that's what I've got on the indexes. Are you buying this market yet?
Not yet. I'm trying to stay patient. It's a terrible environment for buys. In hindsight, certainly should have been more short the market, but it's a little bit late now to be short. I'm waiting to see how this bottoming process resolves, what the price action is like, and when I'm more confident a bottom is in to be a buyer. Otherwise, I'm out or short them or looking for opportunities to short.
Okay. And so, I agree with you wholeheartedly. One of the things to do when the market is being weak like this, like I said, you don't have to get into a trade, but you need to be asking yourself some questions. Some of the questions I ask myself, what about my trading? How has my mindset and my psychological capital been utilized during this trade? What mistakes have I made? And, how well have I, did I have any failures where I failed to follow my rules? What were the impacts on that? Not adjusting trailing stops has been one of the challenges I've been having with this current market. And then also staying away from an attitude of close enough. That is not a time to be have a lackadaisical attitude. And, have I been following my rules? Not my rules, but have I been following my routine? So make sure you develop kind of a question, checklist to ask yourself, how could I have traded better in this circumstances? And then one of the other things is not having a correct bias. In other words, when we don't have the correct bias, we do things like trying to pick bottoms. Pick bottoms oftentimes, especially if you're making new lows, is not often a really good idea because it's a good way to get hurt.
One of the things I kind of try to remind myself about is I think we're close to making a major bottom. So there's no need to be early. If we will make a major bottom soon, there's no need to be early in terms of coming back into the market. A lot of time for this trend to start to play out. And there's no need to be so precise in your timing.
I agree with that wholeheartedly, Steve, with that aspect. Let me go over here and I want to grab this real quick. Speaking of that, I have basically put together a poll for everybody, and we're going to leave this poll in for about a minute or so and ask you to participate in it. So you should have all gotten a copy of the poll. Where do you think we are on this chart? This is a bear market chart. Where are we at? Mark mentioned something about capitulation. Mark, are we at that point? I don't know. Just take about 30 seconds more to respond. Okay, anybody else? It's closing in 15 seconds. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. As you can see there, the majority the majority are saying we're at the fear stage. And I would tend to agree with that. Nobody chose capitulation. A couple of us have chosen despair, that we are down here yet. And I think part of that, it depends on our own level of, our own trading. So kind of interesting. Thank you for participating in that poll. Now, let's back up. Steve, tell us about the stock that you are interested in, but you're not going to buy it today.
Yeah, I'm not interested in buying this today. I think it's, relatively speaking, a strong stock. It's barely had a sell-off. It's gone nowhere for about a month, but it's not sold off either. And I'm looking to be a buyer when the market environment improves, when I feel it, we've put in a bottom and be likely to be favoring the upside.
Yeah.
Till then, I'm just stalking this for potential entry.
So you're going to wait for the market to turn around before you, in fact, make action. Okay, excellent. I like it. Yeah, we actually were anticipating a pop up of this, and we actually got into ENPH a little bit earlier this week on a pullback into the 20-day moving average. And then we were taken out of the trade yesterday or today when it dropped down below our stop loss. And so we were taken out of that trade. My pick, Steve, is this. To pay attention to the leveraged ETFs. One of the things, if you are one of our premium or AutoPilot trading members, we did a training on Wednesday night that went back and did the analysis of the ETFs to see how well they did. This is the leveraged ETF. And during the bull rush of the COVID bull, as you notice here, Gush, which is the leveraged ETF, two-time leveraged ETF for the oil exploration, was up almost 2,000% in a little over 2 years. SOXL also up nicely. That's a three-time leveraged ETF. LABU, similar. But of interest is TQQ and TNA were the best performing index ETFs and leveraged ETFs during that period. Both of them up significantly for that period of time. Now, that's not as to say, hey, this is going to happen all the time. However, what about the July rally of this year, the bull rally? Here was the stack. LABU went up 200%, SOXL went up 108, Gush 96, and then TNA and TQQ both up around 84 to 85% during a 63-day trading period. So what does this tell me? It tells me that, yes, I am positioning myself to wait for the markets to turn around, but I want to be interested in, rather than just jumping onto a stock, I want to be interested in one of these 5 tickers because they should definitely outperform the market. The the ETFs take other things off the table. Don't have to worry about earnings, don't have to worry about all that kind of stuff. And there are, believe it or not, options on every one of these. So, Steve, my pick for this week is wait for the market, but then I will focus on these 5 entities.
I certainly don't disagree with that at all.
But remember, do you struggle with this, not knowing when, where, and how to enter a position? I think that there will be a lot of us struggling with that concept, given the condition of the markets right now. So autopilot trading can help dramatically because we just follow the active trend trading system to get us in and out of trades, the 3-step setup, and we make sure that we are working within those gauges. We protect our capital, protect our profits. And so if you're interested, check out over on AutoPilot. It's a great way to learn where the big fish swim. I did not realize that the leveraged ETF were as big a fish as what they are until I did that additional study on that. Okay, well, that's it for this week. For Trade Your Way to Wealth and Financial Freedom, I want to thank both Steve, Neil, you were missed in this session. And Steve, thanks for your input. It was absolutely phenomenal session. And also, I think it was very clear. We're waiting for the reversal. The market's got to prove itself before we're ready to jump into any new positions. So as we get ready to land this plane, remember 2022 is a year of patience, persistence, and consistency. Aloha, trade well, and prosper. Mahalo. God bless everybody. We'll see you next week.